Hello.
All right, there we go. Cool. Here we go. We are live, impromptu on Saturday night. Cool, man.
Live from somewhere on Saturday night.
Yeah, so Jay Claver, Max Avery, we run Beyond Broke, which is a mastermind group. We got 21 people here. If you guys want to just chat there in the comment, make sure you guys can hear us. Let us know. So I'm going to run a few things down. Had the privilege of going to DC yesterday with Accredited. You guys probably don't know who that project is. Eddie Cullen is one of the founders there, along with Carl Cribb. Carl helped Bloomberg launch the Bloomberg terminal in the late 90s, early 2000s, and worked with regulators to basically digitize securities on the Bloomberg terminal and sell that and build out the network. And then Eddie ran for the mayor of New York a few years ago, has a background in politics as well as international commerce. So really the goal of that token and network is to facilitate trade at scale across religious communities all over the world. Georgetown is a Jesuit university, and so that's why the event was held there. And we had Commissioner Pierce come out. Everything that's been done with that project, we work with the same lawyer, is how we met them. Rick Tapia, he's kind of a leader in the space when it comes to securities law and digital assets, tokenization of securities, drafting agreements that work with all of that. There's a lot of regulation, compliance, red tape that goes into a securities offering that's been tokenized. And so we work with him for a few of the other things we're on. Anyway, really privileged to have had the ability to go to that and meet Commissioner Pierce and listen to her speak at the Fireside chat. And a lot of people are going to know Gary because of all the shenanigans that have gone on at the SEC and the scrutiny that they're under. Hester's kind of been probably the most vocal that they've missed the mark on just not regulating, not providing people a framework to abide by here in the U.S. and, potentially moving people overseas that would have launched projects here. We're not fostering innovation. We're kind of, stymieing that and keeping people from really building things here because there's not a great way to do it. Here in the chat says Gary. Yeah, they're knocking on his door. We'll see if they get Gary out of there by the end of the month. I think Commissioner Pierce has a really good chance at stepping into that chair seat long term. Crypto mom. She's Republican too, so that helps.
She actually passed the Senate confirmation hearing on my birthday in 2017. So
really?
Yeah. I remember watching that on C-SPAN or whatever while that was going on. So it's interesting see this come full circle right now. I hate the way that it's gone so far with Chair Gensler doing some of the shenanigans that have gone on over there. But, like we've talked about on other streams, is that it has played a really good role for people to be able to get better in position and get caught up on, the projects that they want to while we're waiting on a clear regulatory environment. So
it's been an opportunity for people is how I look at it, right?
Yeah.
Others
there's a lot of people I know that weren't at all invested into any digital assets prior to, learning about Ripple at the last possible second and buying some XRP or whatever just from, hearing us talk on Discord and Twitter Spaces and stuff like that. I know in my personal network, just people reach out because they follow me on there from other, real life stuff that we're friends with. And they're like, so what's this that you're talking about now? So there's definitely been a lot more people that have been able to kind of come under the tent that way. So it's got its ups and downs. Are we ready to move forward? Yeah, I think a lot of people are, but it's been a nice pause for a lot of folks.
Yeah, I mean, we've had double the amount of wallets happen over the last 3 years, right? So
Yeah.
when the lawsuit was filed in 2020 against Ripple, and Jay Clayton on his last day stepped out, and Gary Gensler came in a little more than 3 years ago now. They we had 2.7 million wallets. I remember looking at the rich list at that time for XRP in that network in particular, and now there's a little over 5 million wallets. So, I mean, that's potentially, a lot of people have multiple wallets, but 2.5 million wallets have been created.
I have none, just for clarification.
Yeah. Hypothetically, none. So
shout out to T if he's watching. So
T and Kurt. Yeah, so to get back to her chat yesterday, she was asked some pretty good questions that I thought I could rehash here. And obviously I can't speak for her. Crunchbase did the interview and she did a great job.
You said someone from Ripple was in attendance at the event?
Yeah, which was odd. Really odd for me. She just showed up. She's there in DC. Her name is Laura Believe. I don't know if that's how you pronounce her last name. It's really close to Believe, but without an E.
Shout out to Laura if you're tuning in.
Appreciate you, Laura. It was very nice to meet you there at the event. She's head of Ripple's government policy, U.S. policy, basically. And so obviously good for her to be there at the event and see the commissioner speak. The commissioner's one request was that Ripple couldn't ask any questions because of the ongoing suit, which makes understandable. Yeah. But she took some really good questions, a lot of it around the ETF that had just launched, and then the broader view on crypto for the SEC. So just kind of jump in. Like, one of the main questions she was asked was, there was a gentleman that talked about FTX, made that reference. And then he said, before that happened, he kind of felt like maybe there was going to be a segue or a split in who was going to reside over crypto. Maybe it was a new governing body that was going to be established that resided over digital assets in particular. And the SEC would just take their role as securities. And now he feels like, they've kind of folded crypto, or what it was going to be, into the traditional financial space, and the regulators that exist will end up being the ones that, oversee the laws and what comes to pass around it. And she kind of sidestepped the potential for another regulatory body being formed, and went into, a lot of these cryptocurrencies are technically securities, especially when they are first launched, especially if you're using it on the premise that it's going to appreciate because of the efforts of the company that's put it out, right? It's interesting to me, like I did a video on Hedera earlier today. The company that mints the token, gifts a portion of the token to another company to develop the network, and then they create a foundation that provides grants to other people building things out on the network. And if they do have an ICO, it's only to accredited investors or institutions. They don't involve retail in the ICO. And I think that's probably the way this is going to go. I'm hopeful that and she talked about this too, the accredited status. She doesn't really agree that, you need to have a certain net worth or a certain level of income to be considered accredited. Just because you're able to make a bunch of money or you come into some money doesn't necessarily mean you understand how to do due diligence on deals, and you're aware of the risks associated with an investment.
Right. If anything, it just makes you a bigger target for someone that's trying to run a scam because you've got more money for them to take. So
yeah, which not so great there, but I think hopefully they'll pass a type of test where people are able to, show that they are sophisticated and that they understand investments, and that will be what qualifies you as accredited here in the U.S. I've got a question here that says, where is the CFTC and all this? It seems like never heard from them, or am I wrong? They've been regulating in the back They're definitely not as vocal as the SEC. They haven't had ongoing cases. There's been a few that they've had with individuals, but really at this point, they've kind of stated that Bitcoin's a commodity, and that's really the only designation that has been given. So they kind of oversee that one, and the rest of it's up to interpretation. I'm hopeful that we get congressional regulation on the space, at least on stable coins, this year in 2024, and that should provide at least some clarity on some assets. It's obviously not going to be the entire space.
I can't find it right now off the top of my head, but I know that Commissioner Pham did have some more discussions. I think in the past 2 weeks, I saw some videos come out where she was speaking a little bit more about CFTC's role and stuff. So if you're not following her, she's got a personal page and her commissioner page, but it's Carolyn Pham at CFTC, and she's the one that you may have seen pictured with Brad Garlinghouse in the past. She's very, very involved in making sure that they can do the best they can to move things forward. So she's definitely a friend.
Yeah, her and Hester both, right? Like they get the fostering innovation piece of this and allowing things to, be used here in the U.S. and developed here in the U.S. and not trying to push people offshore. Anyway, she also touched on, KYC, AML compliance, and the potential for, decentralized identity. What would that look like under the purview of the SEC and the benefits it would provide? She was also very vocal that she doesn't really want a police state with the implementation of this technology, which I found really refreshing. Well, I think most people don't, right? Yeah. You want discretionary spending, you want some anonymity, you want your privacy, and that can all be built into this technology if it's done right. The smart contracts can inherently have things that allow you to share only what data is necessary for people to see. I mean, she even talked about, people having to show their tax returns in order to establish that they meet the accredited criteria. Well, I mean, and Max and I have talked about this before. There's some people that just don't want to turn that stuff over. So they just, okay, I'm accredited, but nah, I'm good. I'll worry about that later. I don't want to make the investment that bad to turn over that personal information. Right. And you can get your CPA or your attorney to draft. Go ahead.
It stops a lot of people from being able to enter the market and, make a meaningful contribution when they put up roadblocks for potential investors that way. And so if anything, it really hurts the American economy because, the workarounds they exist. You've got the ability for people to run like a 506B fund, and then there's, the crowd-funded projects that people do, but there's a lot of legal hurdles that go into that, and it's not an easy process necessarily for the average person to put in what they're doing by themselves. And so, I think if they're able to reshape that a little bit more, it'll be a really good step for American innovation to be able to move stuff forward, because we've already fallen behind in manufacturing. There's potential to reclaim that. But we do a great job of engineering and coming up with good ideas, which is kind of what drives the American economy right now. And if we lose that, then we've got bigger problems, especially as we have de-dollarization conversations taking place with the petrodollar going away. We don't want to lose our influence entirely as a superpower. And so it's really, if anything, a major systemic threat to the American economy for them to lock people out that way from the market, in my opinion.
Well, it kind of dampens the American spirit, right? Like if we really had, previous to 1930, before the SEC issued all these laws around accredited investors and all the things that you had to be able to get in on these deals, in the 1920s, we saw a boom because people were able to get in, put their money to work, do due diligence on deals that they thought were going to help their family. Obviously, that ended poorly with stock market crashing, and there was a lot of euphoria and the shoe shine boys telling you what stock to get in on. And then we kind of had the lost decade there, but maybe some of that was planned. we want to foster the ability for a lot of people to get in on deals. That's why we run 506Bs out of the mastermind. We allow people to get in on private investments that they otherwise wouldn't have exposure to. So that's a passion of ours, and it seemed like it's a what's he say here? Max should give me a Walter from the Big Lebowski with the glasses, the blue buckers.
I value my sleep at night, and I am fully on the train of trying to wear blue blockers and avoid blue light after dark. So it's 8:30 my time here, so I've got these things on and trying to be able to get some restful slumber after I finally go to bed tonight. So
yeah, I don't have an excuse. I'll just take a melatonin, I guess. Yeah, so with the accredited deal, I'm hopeful on that too. I hope that they come up with some type of qualifying test. I took the 65, and just to be transparent with people, I did not pass the 65. That test is about 75% compliance and about 25% actually helping people make money and understanding due diligence and deal flow and all that. If it was directed for becoming an accredited investor and not toward becoming somebody that's selling securities, I think that the test would be structured very differently. And it's been a blessing that I didn't pass that, because there's a lot of things that I discuss now, had I been regulated by the SEC and FINRA, probably wouldn't be able to touch. So ended up working out. But I have an understanding of what's on that test and how it doesn't really fit the criteria for helping somebody become accredited, even though that is, so you can get accredited 3 ways in the US. One, you can be single and make over $200,000 a year. If you're married, it's over $350,000, and you have to do that for 2 years in a row and then prove that with your tax returns. You need a net worth of at least $1 million outside of the equity in your primary residence, or you can take the Series 65 and get sponsored by a broker after you pass. But then you got to keep up with all the continuing education and compliance and disclosures and everything else that's involved.
it's a lot of hassle.
Yeah, it's a lot of red tape for maybe being able to throw in on some deals.
So it's like people that have to be serious professional investors to want to jump through those hoops, and so the average person just doesn't want to mess with it. So
yeah. So anyway, that's why
TK asked Supreme Court or settlement
for the Ripple case.
That's what I think he's referring to. Yeah.
I think we could see congressional legislation around stablecoins that designates XRP as a currency or a bridge currency. And really what's left in the case, it's already kind of got that designation at this point. The underlying asset itself is not a security. I highly doubt it gets escalated to the Supreme Court at this point. The SEC has been pretty much destroyed on the majority of the points they've made in the case. They've had to, absolve Brad and Chris of any wrongdoing. XRP is obviously not a security. They're really down to the initial sales of XRP that were done by Ripple previous to them using XRP2, which is another company to sell the securities, and then forming the foundation like I talked about before. So, John Deaton and a lot of the other lawyers that are looking at this, they think maybe a $20 million settlement, and that's the fine they'll have to pay, slap on the wrist, and they'll go about their merry way and be able to achieve what they've been working to do over the last, almost 12 years now.
Yeah, it's been a long time.
If I have all my XRP in an LLC, how can I use my XRP for yield in the AMM once it launches? You'll put it in the AMM and earn yield. The wallet address that you're holding the asset in should be listed for the LLC, and so the income produced out of the AMM or with the asset would then flow to the LLC. You're going to want to pay yourself a reasonable salary in the eyes of the IRS so that you can file as an S corp and have pass-through taxation. That amount somewhere between 50 and 70,000. So you'll have to pay, income tax, Social Security, Medicare, Medicaid on that, and then the rest you could take as distributions, aside from your W-2 payment that you set up for yourself.
And it looks like we're close to getting AMM approval. I have heard whispers on Twitter that there are going to be some people changing their votes to yeses soon. So we'll see kind of how it transpires. But I think that we are getting very, very close to seeing that come to fruition. So thanks for the question, Dennis. Appreciate it. JT asked, once you are accredited, does it expire? There's a renewal process that you'll have to go through to keep it.
So once you're registered with somebody and you've proved that you're accredited, they're allowed to facilitate deal flow with you for 5 years, even if you don't maintain that status. If it's a new person, you'll have to re-verify every 2 years. So, if let's say you got a letter drafted by your attorney or your CPA, and that's what you utilize to verify accreditation with whoever you're dealing with. If they already have active deals with you, again, they can hold that information for 5 years, and then they've got to re-verify. But if it's somebody new that you're presenting it to, then after that 2-year period where that was drafted by your CPA or attorney, then you have to get another one from them to supply somebody new that you're to set up an account with. So, thoughts on
VeChain and Flare here? I'll let you handle it.
I'm bullish on VeChain, man. I think that they have I like things that have picked a niche, right? And they've got partnerships and traction in a space and real world use case and income off of something. VeChain is one of those chains protocols. And a lot of it's outside the US too, right? They're dealing with Walmart in China and other jurisdictions. And, supply chain management is a huge use case for digital assets and blockchain, smart contracts, NFTs. So I'm super bullish on that. Flare would be completely separate. I think the main objective of Flare was the time series Oracle, to create a way for people to provide data on chain and incentivize good data supply and disincentivize people to provide poor data. We still haven't seen like
the days of the captchas where you had to go solve, is this a fire hydrant? People got annoyed at those, but it was really training AI to be able to recognize things in images for a long time. So there's got to be some incentive. It's like, well, if you want to go forward on this link, you've got to solve this puzzle for me. So that only works for certain amounts of data. So it's I think that there's going to be some interesting developments when people start exchanging information for other value, kind of at scale. It's a far cry from the survey guy in the mall food court, asking if you have a few minutes to go watch a movie or something. But
you have a moment to talk about our Lord and Savior Jesus Christ.
Yeah. We've got a lot of new things rolling out. So I'm going to go refill my drink real quick. I'll be right back.
You're good. Go ahead. I got my water with me. On Flare in particular, I'm hopeful that the S assets and the F assets are able to be used at scale. I think Hugo eventually will get there. I really think, and this is my conspiracy on Flare, is that the majority of the Flare was given to banks and institutions that held XRP when the snapshot was taken. Ripple employees weren't allowed to participate. David Schwartz's motto is "Don't miss the next Ethereum," and he just happens to be a contractor of Ripple, so he was able to receive the distribution of the Flare token. And interesting to me on that. And obviously, they've driven the price down. It was trading on BitTrue for like 50 something cents before the actual distributions took place. Those were basically like futures. So if you had been holding your XRP on BitTrue during the time of the snapshot, they were like pre-funding your account with the Flare that you could trade on the platform. And then after they did the distribution, everybody dumped, and it's been driven down to like a penny at this point. But that's a really good thesis if the banks wanted to accumulate more before they did roll out their own DeFi protocol on that platform. that's where I kind of think that's headed. Again, they were probably the biggest holders at the time of the snapshot. Like I mentioned before, it was around 2.7 million wallets at the time. And I remember like 1.28 were just, pennies. Just the reserve was left in them. So it was really only about, 1.5 million wallets that had more than 20 XRP in them. And I think to be in the top 10% at that point, it was still about the same, like 2,500 XRP got you in the top 10%. To be in the top 0.001%, it was like, a couple million XRP. And so they would have got the largest amount of that distribution. And if they are going to actually roll out the F assets and, all the promises that Hugo made early on, I think that they could be really lucrative long term. If they get the adoption of the banks and institutions for DeFi, like, it's probably going to beat out the majority of the other DeFi protocols.
There's a question. It's if I understand correctly, it sounds like you would slowly lose XRP using the AMM. Is there other lease options that could produce a good yield with XRP?
Yeah,
I think you did a video on this with Molly, didn't you, a while back? That kind of cover it again if you want to.
Yeah. So with the way it currently exists, the answer to your question is yes. You have some impermanent loss, right? So if you had a fluctuation in price of XRP versus the other asset, when you put it into the pool, half the asset, is swapped for whatever you're providing liquidity to. And there's some rebalancing that takes place to kind of mitigate that loss, but you're still going to have loss if price changes. So this is how I'm hopeful it plays out. And I think Arthur Brito and David Schwartz are smart enough to do it this way, and dealing with Polysign like I have. So Digital Ascension Group, family office, specialized in digital assets. We have the first ever wealth management account for our clients with Polysign Standard Custody. And so I probably have a bit different perspective than most people. But with that,
yes, Polysign is still actively doing business for the people that are going to jump in the chat immediately.
Still good. Yeah, well, I'm glad you say it,
Yeah.
And people are concerned, and rightly so. I mean, you've had all these other failures and problems. They're bankruptcy remote, so even if there was bankruptcy of some kind, I mean, they have a contingency plan where there's another New York trust bank that steps in and takes over. The platform stands. There's no problem with the wallets or infrastructure. Like, we're good.
Yeah, it's all good and covered by $50 million of insurance per vault. So
yeah. So anyway, they have a piece of the protocol that's inherent to their platform. It's a blockchain that's built out on top of the XRPL, and it allows for escrow and delegation of assets. So it locks whatever you have in the wallet there. It stays in qualified custody, and basically issues a trade line or a liquidity line to whatever you're providing that to. So it could be an exchange. So, in the future, it's going to be a mandate for all funds and RIAs, anybody that's trading assets on behalf of somebody else, that the assets stay in qualified custody the whole time. And so to be able to do that, you have to lock them. It's basically used as collateral for a trade line or whatever it's going to be. Trade is executed, and then that settles atomically on chain. With the AMMs, hopeful, you're able to escrow your XRP in the account. That way you don't have to put it in the pool. You just delegate that liquidity to the pool, and it's represented by LP tokens in the pool that are half and half, whatever you're trading, right? So that does a couple things. One, it mitigates any loss that you could have on the asset because you didn't have to put the asset into the pool. That's just represented as LP tokens. And the other piece of that is that right now, as the AMMs, on orchestra.finance are done, one of the assets has to be XRP in the pool. If it works the way that I'm hoping, then neither of the assets have to be XRP. You could provide liquidity to a pool that was HBAR and Casper, right? I'm pretty bullish on both.
Something that's got a lot of volatility in it that still has a lot of room for making a payout. It's probably going to be substantial. So
yeah, and so you're mitigating
or substantial loss.
Yeah, that too. Yeah, that's you're gambling. If you're trying to rip, you want to look for asymmetric bets. That's really what it comes down to. But anyway, so if it works this way, and I think David Schwartz and Arthur Brito are smart enough to do this, then you mitigate any loss or potential loss that you could have on the asset, and you also have potentially more upside. So
Nate's asking down here if the letter is essentially an audit of your financial position. I'm assuming that we're talking back about the accreditation verification. I wouldn't necessarily call it an audit, but it's going to be something that you're going through and saying, hey, like your accountant that provides that letter is going to verify your funds, verify that you meet the accredited status, and then provide that letter across. So it's not a huge deal. It's just a pain in the rear to get stuff like this done. And so if you're working with a CPA, it's almost tax time. If you want to ask and get that kind of figured out as to what their process would be to provide you that letter, then, I would go ahead and ask them while you're taking your tax documents down there. Just that way you can have an answer for what their process is.
Yeah, might as well. You're going to be there anyway. But yeah, they'll go through and audit things and verify that you meet the criteria, and then be able to issue a statement that you can provide whoever you need to, show that you're accredited. What's going on?
Thanks for your question.
Yeah, this is good. What's going on with the new Basel III rules? I haven't heard much about it. So they're in effect in certain jurisdictions. I don't think that they've been fully rolled out. Is that kind of what you understand, Max? I think like March is when they actually.
There's some kind of delay. I don't understand what it is, but yeah, they're sandbagging it a little.
Yeah, so the implications for that are pretty important. People are going to have to actually hold reserves and have them auditable. They can't do this, fugazi. It'll definitely crack down on the derivatives market. So right now, this isn't the best illustration, but it'll get my point across. Okay, so when people ask what are derivatives, they're bets on bets. Okay, or bets on underlying collateral. So let's say you're at the Super Bowl. We got it coming up here in another less than a month. You're in Vegas. You see two guys in front of you. Okay, and you're watching the game, and they have a bet on who's going to score the next touchdown. Okay. And they have money on the line. You're going to bet $100, which is your collateral. With leverage, you're going to 10x it or 100x it. Okay. That the guy on the left is going to punch the guy on the right when he loses the bet. That's what derivatives are. And that's what banks do. And the underlying collateral that they use or have to put up. Well, actually, I take that back. One more thing. You borrowed that 100 from your buddy. It's not even your 100 that you used on the deal. The banks will use the same treasuries that they borrowed from somebody else as the collateral for the bets on the bets that they are putting out. So that's how you get to this multi-quadrillion-dollar market of derivatives that are 2 and 3 layers worth of bets on things. And obviously, when they work out, it's a big payday, especially if you're taking leverage on things. And when they don't work out, like in 2008, it ends up collapsing multiple sectors of the economy. So there's a lot of risk, and there's really no ledger or accounting mechanism to even see how much exposure these financial institutions have in the derivatives markets, which blows my mind. But Basel will make sure that they're not rehypothecating the same treasuries or the same collateral over and over again for these bets. And so if we do have loss, you're still going to have significant downside. And they always hedge with options and other things if they're smart. But it'll shore up a lot of the shenanigans that have been going on. Here's your Amazon.
Yeah.
What you got?
This was the leprechaun that the police got an amateur sketch from. So this is where the gold is actually currently.
Is amateur even spelled right?
High quality television.
Yeah. It's crazy to me that.
Have you noticed the price predictions for XRP are much lower now than in the past? Influencers and Jimmy were talking in the thousands a year ago, and everyone talks about $10 to $15. I think it depends on just kind of who you're following.
Yeah.
I still see people talking about high price XRP long term. I've been a big proponent for a long time of seeing, some stair steps of things. A lot of people think that there's going to be an overnight 0 to $1 bajillion XRP, and I think that there'll be a few pauses along the way as utility comes online, as regulations get put in place, and just speculative run ups and things like that. So I don't know where it ends up, but I think that when we see all of the assets that are going to be tokenized and transacting and derivatives get introduced and all these other things, there's quadrillions of dollars that will be moving over the ledger at that point. So it depends on how long you want to hold,
Yeah, it depends on how much. Well, okay, I'll say it this way. I talked to DAI and Brad. They were nice enough to have me on their show last year. I consider them friends, and in a conversation with DAI, he mentioned in conversations with Ripple, he said that we will either be right or we will be really right, and the right is 10% of Swift volume. Okay, so it don't get the back end of the stock market and all these other things that I think would work really well on the XRPL. Maybe there's something that
it's a crowded space. So I mean, there's going to be some things that
competitors
and another network, and yeah, it makes sense. They're not going to necessarily get everything, but
it's been delayed too, right? Like so maybe that was part of this deal. But even at 10%, go ahead.
Yeah, I think that just the partnerships that Ripple has in place and the conversations that they're having, that I don't see many/any other networks having those same talks, says a lot for kind of where we're heading as far as the future of XRP as a digital asset.
Yeah. 10% of Swift volume easily puts it at $50 or $100.
Which it's cool.
Yeah, I mean that changes a lot of people's lives. It's
yeah, and some people are gonna want to cash out at that point and move on, and there's plenty of other opportunities that they can get into, and I wish them the best. Everybody's situation is different, so I'm not here to tell people what they can and can't do on things. I don't even own any digital assets, so it's just a matter of what your pain tolerance is for how long you want to hold on to things. So.
Yeah, and at scale, I still think 4, 5, 6, 7 digits is possible. Do you see anything happening in April? I think we could definitely get settlement on the case. Settlement on the case is not going to correlate with price. I hate to tell people that.
Well, there'll be like a speculative pump again, but I mean that's really a good opportunity to scalp. I feel like if people want to play that game, so
I don't even think we'll get that. We got that when they designated the asset itself, not the security, right? Yeah. And I think the pump we saw was people speculating that some of the partnerships and other people would kind of come in and use it at that point, but we haven't even seen that because we still don't have real clear guidance on it here in the U.S. So, and
that's still a big pause for a lot of institutional money coming in, even though there's a certain amount of clarity that does exist at this point. There's a lot of people that are going to be in compliance for whatever financial institution they work for or family office or something else that says, look, it may be a good opportunity, but it's not worth us risking getting sideways with the SEC on stuff. Because of what we want to do now. So I think that once there's full closure to the case is when that stuff starts moving. And then you got to figure there's still going to be some time in development and rollout that has to be finalized. So, that's not to say that these projects aren't moving forward speculatively, that, there are banking partners that are saying, look, we know this is probably going to go the way we want it to. Let's go ahead and start the project. We're just not going to go live with it. But there's probably still going to be some tie-ins and things that have to happen from a development perspective before you start seeing people roll out, Ripple projects at scale and transacting in XRP. So I don't think it's going to be like an immediate, like, gavel hits the desk and all of a sudden the price runs up off of that. But I think you'll start seeing people come online after that.
Yeah, I think you'll see people announce partnerships, right? There's 1,700 like pre-allocations that haven't been disclosed in the lawsuit here. It would be interesting to see other people aside from Ripple start using the asset. I think one of those could be R3. They got an allocation. They settled with Ripple after going back and forth in a lawsuit for 1.04 billion XRP. They were originally allocated 5 billion at a higher price than what it was trading at the time, and they were mad about that. If they've developed multiple things for the settlement of different securities and back-end systems for financial products, and obviously they have an affinity for XDC and that network. They've made multiple announcements about that. But
and SBI has kind of similar relationships with Japan.
Yep.
And SBI is a big major player in the East. So I think that both of those assets are kind of posing a significant run up after we get clarity on things. It's just a lot of people are just waiting on the sidelines because if they're doing well now, they don't really necessarily need to rock the boat. And I can appreciate that from a compliance perspective. Sometimes it's better to slow the cart down and, be on the safe side of things so you don't lose the whole bag. But
yeah,
I think that we'll see it in the near future. It sounds like from the discussions that I've overheard going on, from the conversation that you had with Commissioner Pierce, people are kind of indicating that the market is getting primed and warm to new development taking place so that the U.S. doesn't get left behind. A lot of people say that the U.S. has got left behind a long time ago, and I don't really think that's the case, but we definitely have missed out on some opportunity in that some people have relocated to Singapore, some people have, gone wherever else for a better compliance environment. That doesn't necessarily mean that's the end-all be-all, but that's kind of where we are at the moment. So,
well, and she mentioned, sitting on our hands and waiting has had some benefits. We've been able to see how other jurisdictions have rolled this regulation out, some of the impacts of that, maybe where we could improve or iterate on top of it to do even better than they have. And the U.S., it's a fine line we're walking, right? We don't want to get so far down the line and still not have clarity around assets and a way for people to innovate and foster innovation here in the U.S. But at the same time, because we are the leader in the world, we have the global reserve currency, which I don't know how much longer that lasts. Everybody can debate on that. But we're in this weird spot where we're still the leader in a lot of ways, and people do things predicated on what we do. But if we allow them to be first movers and trial some things before we step our foot in the water, we can make sure that we're doing it with the best foot forward and we're not making the same mistakes other people may have made. So that was kind of her feel, when I talked to her yesterday. She did say
that's a fair perspective. I don't like always being the first guy on everything for that same reason, so it's nice to let people test the waters a little bit first and then figure out what they did right, what they did wrong, and then move forward on that, especially if it's something that requires such a tremendous amount of resources and agreement to be able to get legislation in place for something and get guidance. It's not like she can just go wave a wand and make it work. When you're trying to push things through Congress, you have a whole lot to balance. And I think that, with the current state of things in the House, Congressman Hill has done a good job, representing where we are in the space and that this isn't just scams and cartoon monkeys and things like that people are doing, and put it out in a way that people understand that, okay, Congress is looking at this, they are going to take some action at some point. It just hadn't happened yet, but we're not always privy to the same knowledge that everybody else is, and so sometimes it's just one of those that you have to kind of sit back and wait, and while you're doing so, if you want to load up on more of whatever your favorite project is, then you got more time. So.
There's a good question here. Somebody asked that we explain the Bitcoin halving. So the Bitcoin halving should happen sometime in April and May this year. It's like every 222,000 blocks. Basically, the rewards that are given to the miners are cut in half. And so when the network was originally launched, that was 50 Bitcoin per block that you were the first one to provide consensus on. Consensus at the end of the block is basically a really hard math problem that you have to solve, using computing power, and it verifies all the transactions within the block.
Ask me about the times that we set video cards on fire by trying to do them. It's not fun.
No, I'm sure not. And now you need, like, how much GPU do you need to even compete at this point, Max? Like,
it's crazy. I mean, there's a company that I did some business with that they had literally like 100,000 square foot warehouse that's filled out. But I mean, back in the day, we had
home PC.
Yeah, normal machines, and occasionally stuff would catch on fire, and you'd have to replace a GPU or something like that. And because Bitcoin wasn't really worth anything then, it was really just a waste of money. But it was cool. But that was the olden days, and we can't do that anymore. So I mean, you can, and you're just not gonna make anything off of it. But you're probably not even going to recover your power expenses at this point. But
anyway, so
I don't know.
Every 4 years approximately, we have a Bitcoin halving. And so people talk about Bitcoin being deflationary. It's really not deflationary. It's just less inflationary over time. There's less and less Bitcoin coming onto the market over time. And in order to keep up with the energy costs associated with mining on the network, the price has to appreciate of the token. Otherwise, it's no longer profitable. People aren't going to mine it. That's the incentive to verify transactions on the network. So we're currently at 6.25 Bitcoin per block solved, and that's the distribution you get for it. So after this next halving, it should be 3.125 is the Bitcoin rewards that'll take place. And after that's happened every single time, there's kind of been a supply shock on the market. People hoard it, and there's only so much coming onto the market, so price gets driven up. And there's a lot of speculation that goes along with that.
The government's getting ready to dump like another 20 lunch.
So the DOJ, I think they had like, what they say, 130 million Bitcoin that they had confiscated and that they're going to drop onto the market. You got Mt. Gox releasing all of their Bitcoin back onto the market. You've got Satoshi's wallet that has 1 million Bitcoin just being reactivated the other day by somebody sending it some Bitcoin. So I don't know. I don't have a crystal ball. But that doesn't bode well for price if you're going to have that much Bitcoin come onto the market. And the ETFs really haven't driven the volume the way that people were hoping.
Yeah.
Right.
U.S. government to sell $130 million worth of Bitcoin. This was their statement the other day. Yeah.
130 million worth. Sorry.
That's, it's some. I mean, we do have large amounts of institutional money coming in now. And, to be the contrarian on the volumes for the ETFs, if anything, it's helped to stabilize the price a little bit more. Now I say that, and it's dropped down, and we've kind of had some volatility in the asset, but BlackRock is steadily DCAing every day, and so I think that we're going to see more and more stability coming in with that as time goes on. Now, you get that ETF rolling, you start seeing other ETFs launch, which I think is going to happen. And there's a lot of people that go back and forth saying, well, that there's not going to be an XRP ETF because it's not a security. And I saw some people kind of citing the fact that, what an ETF actually is. And it's not that the underlying assets themselves are securities. It's that it's a securitized product. That's the same way that you can have a corn ETF. I can grow corn out of the ground and the SEC is not going to come kick in my door. Now, the USDA might, depending on how they're feeling that day, but it's not a security. But you can't have a corn ETF because they've lumped this into a securitized product that way, just like any other commodity can be. And so I think it's possible to see an XRP ETF. Now, does that affect the price of XRP at a large scale? Probably not. But I think it would be a good thing to help drive adoption further and get more people interested in the XRPL from a stability perspective. And that's really what it's going to take. I know that JQ had posted on your YouTube community tab something about it's the XRP XRPL at the Ethereum conference in Colorado.
Oh yeah,
talking about EVM compatibility, and that's going to be coming in the near future. So the fact that these conversations are happening, they're attracting developers now. People are getting fired up again, and it's there's a lot of doom and gloom that I've seen people talking about in the XRP community as a whole, but it's from a development perspective, that's not the same thing. There's people that have got investor fatigue and have been holding on for a long time that are upset, but I don't think that correlates into people that are building on the network and building real world use case, which is what needs to happen in the end game.
Yeah, you got these side chains that allow for smart contract capability on the network, hooks in the EVM side chain. With the headwinds that are ahead of Ethereum, I think it's very timely that we have that side chain launched on the XRPL, and it'll soon be interoperable. We've got XLS 38D that is an amendment that's up for vote. I think it's got 8 or 9 votes at this point. So that'll allow for interoperability between the side chains and the mainnet. And then, I think we could see a lot of adoption take place at that point. There was a person here that asked about quant. I think Overledger is important.
Find it.
It's I got it here. So Ricky Tiffy has asked, can you please talk about quant and how important it is and how it's used? I think Overledger is a great protocol, and it will be used, and it allows for interoperability between different networks. I think it fills some of the gaps that might end up existing long term. And I think it's a longer play than some of the base networks that are likely going to be kind of the bedrock of a lot of the Web3 applications, dApps, smart contracts, settlement for financial institutions, and enterprise development. I'm not so bullish on the token that's associated with Overledger. It doesn't make sense that it would be $1 million a piece or anything crazy because it's used to pay the fees on the network, and the fees are denominated in quant. So if you really wanted people to utilize the network and license the software and for it to fulfill its use case, I think a reasonable price was probably better for actual implementation than it being
phenomenal technology, but probably not my pick for ROI.
Yeah, same. Let's see. Quincy says XDC's inflation rate is 0.05 to 0.7 over time. Will go down to pay the node runners. So there's 38 point something billion XDC in total.
A lot.
There's like 25% that's been released onto the market right now. Maybe it's a little bit more than that. They have an escrow that they use to incentivize verification of transactions on the network, right? They do provide anybody that runs a node. If you've got 10 million XDC, you can set up a master node. Currently, all the master nodes are taken on that network. I think there's a total of like 130 that are allowed with the current protocol. And there's like 40 standby nodes left. And those earn 8%. As the network expands and more use case and volume is brought to that network, then I think the next level is like 360 master nodes that they can scale to or implement on the network.
You were talking the other day in the mastermind about the potential of setting up an XDC node, correct?
Yeah. So we have 2 standby nodes on the network that just need funded. And we've actually been working on a solution for this for a long time that'll allow people that don't necessarily have 10 million XDC to participate. We went and I spoke at the conference this year in Austin. Hopefully we'll get to do that again in Dubai this next year. And anyway, there were multiple people there that had set up companies where them and their buddies had bought, maybe 2.5 million XDC a piece when it was early on, and they had all funded a node together, and they have somebody that pays the distributions once a month that is the treasurer of the node, right? That it becomes cumbersome when you get, smaller allotments to come in, and a lot of people don't want to participate in a meaningful capacity. They just want passive income, right? So we're working on a solution to provide an SPV where people can submit their XDC for equity in the SPV through a compliant Reg D raise, and we'll programmatically pay the distributions through a smart contract on chain to those individuals, and that'll be something that we launch to the people that are involved with the mastermind group. So hopefully, when we're raising it, I can't talk about it, but while we just have the idea, it's something we can discuss, which is cool.
Just shout out here because Billions is an awesome show. So that'd be an interesting episode. Do you think Ripple uphold Polysign private equity picked up through Link 2 will pay out big later?
It's a good question. Link 2 won't buy things unless they think there's upside on it. So if they have it on their platform, probably, they've picked a few that didn't work out, right? So like BlockFi in particular, there were some losses there, but you never can be,
Had great potential, just wasn't executed well.
Yeah. Just had exposure to FTX and the whole thing, right? So, to answer your question, yes, in short order. How much? I don't know. I'd have to speculate on that. All those are very big players in the space, and they are things that we have raised for in the mastermind group as well.
I'm a big fan of the way that Uphold is structuring everything with their platform. I think that they're really going to kind of be the model for a lot of these in the future for how it should take place. You've got FTX as your do not do this group, and then I feel like Uphold's really kept things as transparent and compliant, and just ease of access and use is phenomenal for the layman that doesn't want to jump through all the hoops of a typical crypto exchange experience on those types of things. Peer-to-peer transactions, makes it a little bit different, but
they're very secure at this point. I got to talk to their CEO last year also at XDC in Austin. Got to sit down, have some whiskey with him after the event, which was nice, Simon. And they have an OTC platform. They don't advertise this. This is something that we have access to through the mastermind and also the family office. If you are going to be trading higher volumes, you can reach out to me. I'm happy to connect you with the broker there. They do want at least $100,000 in trades per month, and preferably more than $250,000. But if you are trading that type of volume, they have access to better liquidity than anybody else. And the fees associated with trades on Bitcoin and XRP are going to be lower than you're going to get anywhere else. So
the closest kind of comparison, I think, for anyone looking for another solution that doesn't want to do that kind of volume necessarily, I know that some of the members that we have in the mastermind have set up a business account with Kraken and had good experiences there as well. I like Kraken all right. I don't particularly use it, but I have, and it's a good experience. So I think they're probably going to be another one. They've entered the regulatory conversation enough at this point and kind of have the right connections that I think they'll be around. But yeah, if you're asking just on stock price valuation in the future, I'm bullish on all three of those. Polysign obviously hit some rocky, I don't know what you want to call it, but it's some bad PR, I guess. But it just was kind of a series of things that led to that. And I think that really it's going to be water under the bridge. If anything, it's a big blood in the streets moment that if you are wanting to, not financial advice, but buy more Polysign equity, you could probably get a better deal now and be willing to hold on to whatever the culmination of that is. And I know that we've talked about it a little bit, is that I feel like Polysign's probably not going to IPO. I feel like they're going to be acquired. Is that still kind of your position, Jack?
Yeah, I mean, Jack's had multiple conversations around that. Fireside chat with Link2, and then at XRP Vegas last year, he's talked about a strategic tuck-in acquisition. Tim Keeney sits on their board, 30 years at BNY Mellon. Polysign really isn't, I say this, the test case for Polysign is crypto. The real use case for Polysign and their technology is tokenized securities. When other financial products become tokenized, they're it. Like, they have the full suite of services to be able to do that at scale. And I think that's really kind of the watershed moment when institutions step in and likely, potentially BNY Mellon acquires Polysign.
Yeah. That'd be my guess as well. A lot of good questions. If you guys are enjoying this, if you don't mind, hit the like button, leave us some love there. Engage in the chat. It helps the algorithm pump this up and get it out to more people. If you have a friend that you think would be interested, please send it to them either during or after the stream. This is recorded, so you can come back to the channel if you missed anything and check it out. What else we got here for questions?
Here's one. How long until we see $30 XRP? I need to drive a Range Rover. Make bank. Max and I differ on this.
Depends on which Range Rover you want. I mean, we could find you a pretty good deal on one that's not going to run that great.
Yeah, they have some problems. Max and I kind of differ on this, and it depends on how it goes. I don't know if we're going to have a speculative run or if we're actually just going to see utility, and that's what's going to drive price. I think it's probably a combination of both to get to the price level that we need to facilitate liquidity and transactions on the network. Ripple runs some private ledgers. I know that, we went to Swell this year, had conversations with them. They're building out these use cases on the private ledgers that they have that are replicas of the XRPL. And people would say, well, why would they even use the XRPL if they can facilitate those transactions with these private ledgers that are just a replica and use some other asset? Well, the network that exists allows people to not have to trust one another. They don't even have to trust Ripple, right? And that's really what the benefit is. People run validators on the network to trust the network. There's no incentive to run a validator on the XRPL. It costs you $80,000 or $100,000 to run a full history node, and you're not making anything back.
Yeah.
That it's just continual cost. So the only reason that you would do that is if you're developing on the network, you needed to trust the other parties that were transacting with you on the network and verify their transactions. So
even though the node operators get a little bit salty sometimes on the X, God bless them for sticking in there and putting the money up and putting their money where their mouth is on that, So, and I do feel, even though we love to see the amendments pass and get pushed through, the delays that they put in place really are for the best interest of the network. It's something that you don't want to roll out the wrong update and cause a big problem. So we are very fortunate that the people that do have voting rights within the network,
being good stewards.
Yeah, doing a good job.
David made that point on Thinking Crypto with Tony the other day. He said, he's excited about the AMM for sure. He developed it and he thinks it's great.
Yeah.
But it's
you build something and you want to be able to show it off, right?
Yeah.
It's been sitting, getting a new car and making it sit in the driveway. You want to go show your friends. So it's not really all the way full circle.
He understands that, if something is truly decentralized and it is a federation or there's a governance and people are going to be able to vote and implement things and make sure that it's going to work right, then it's best suited for it to roll out the way it has been. It's a back and forth, and people want to make sure that there's not going to be significant loss for people if they implement it on the network or cause problems that, the XRPL has been running again, June will be 12 years with no errors. If they roll out an update and something does happen, what does that mean? So,
I don't know anything about this. Do you know anything about this?
have you guys heard of Kinesis money? If so, what's your opinion of it?
No idea. Sorry.
Happy to look it up, but it's nothing that's been on my radar up to this point.
Do you think Basel III will clean up or crash the derivatives market? Banks, in parentheses.
Both. I think if it was rolled out in a way,
I mean, wouldn't you consider a crash a cleanup in general for
well,
banking?
it is. You don't have a tulip bubble or something crazy happen, and then you wipe out all the trash and the corruption, and then what?
See who's been swimming without their clothes on for a while, and
right.
You end up with hopefully some more stable, sound thinking financial institutions. Kind of like what I was talking about crypto exchanges. I think Uphold is going to be one that makes it through and works long term. There's some that we've seen already not necessarily go through the right steps and have problems, and there's still more yet to come, I believe. So I think banking is no different. Yeah.
They've got all the licenses and everything that they need to operate in jurisdictions that they do. And there's been a lot of people that have worked against regulators. They said, oh, well, they've delayed even putting a framework together. So we're not even going to do what they say. We're just going to operate completely outside the law. That's not a good way to go about it.
Do you think the Ripple will ever be bought by another company like Visa or MasterCard?
No.
I don't see it. That'd be a big acquisition, and I think that the FTC would probably block that acquisition for antitrust laws.
Yeah. JP Morgan already tried that.
Yeah.
They came in and tried to buy Ripple, I think in like 2017 or 18.
Yeah.
And they told them no. So Glint. Yeah, we've heard of Glint. We've met with their team. We got to meet them at XRP Vegas last year when I spoke.
Cool project.
I was actually on the same panel as the CEO of Glint last year, which was really cool.
Yeah, if you go back through Digital Perspectives channel, there's the full XRP Vegas clips that you can watch there. I think that we have just the clips of Jake speaking on his channel, but if you want to watch the full thing, it's on Brad's channel.
Yeah. He was very intelligent. I think what they've done is great. Tokenization of gold. It's auditable. It's exchangeable. You can go there and redeem the gold for the token. And it's cool that you can spend it on a card. It provides a lot of utility to gold that you otherwise wouldn't have. I like gold and silver for an emergency fund. That's kind of how I use it, just to hedge against potential problems that could transpire. And if you wanted to diversify within that, having some gold and silver on hand, as well as an allocation to Glint, I think is a great way to do it.
I like Palladium because I can retrieve them from catalytic converters very easily. So, next question: does Coinbase, Kraken, and Uphold also send a copy of our 1099s to the IRS? It's not the document, but I know what you're talking about. I guess is that our tax documents getting sent back. So you're going to need to make sure that you are claiming your transactions if you've done trading on there. They will know. The tax man's going to find out now if you've been buying and selling a bunch and making a bunch of money. So.
Yeah. There's KYC AML compliance, right? And those transactions are there. I don't think they're intentionally going to out people, but I think, that information, they're going to issue a tax document on your behalf so that they're in compliance. For the funds that we run in the mastermind, we've got to issue K1s. That's just part of the deal. You get that. And
especially if you get pinged with an audit and you didn't claim all this, you're going to have a big problem. So it's always good if you want to mitigate taxes to take the right steps to mitigate your taxes properly and don't just dodge them, because there are plenty of ways to avoid paying the full amount of what you would be responsible for in your annual tax fees. But what you can do, is talk to someone that's a good CPA, attorney, structure your stuff. Jake's got a whole host of resources available through Digital Ascension Group that he interviewed 200 different people.
Yeah.
So if you don't want to call Jake, you don't want to set something up with Jake. If you want to find someone local and go out on your own, do that too. Somebody, but find a professional in each of those fields that is familiar with digital assets, because the regulations that do exist and don't exist yet, and everything that goes along with it, is a little bit more difficult for some of the people that are just only trained in legacy to be able to put into place properly. So just make sure that you have someone that's kind of up to speed on that. And it's becoming more and more of a thing that you have financial professionals that are starting to look into this, because they really finally see that things are coming now. But they're still behind the curve quite a bit for the most part. So
I would mention, if you're trading in your personal name, you're going to be liable for every single transaction, right?
Yeah.
One of the things you can do if you are down at the end of the year, we're past the end of the year now, but if you had, gains at the beginning of the year that were in capital gains, you can use the wash rule in crypto, which you can't do in stocks. So you can sell and buy right back, and you can actually realize those losses. You don't have to wait the 30-day period like you would with traditional assets. So really good way to go about it to be able to offset those tax implications if you do have them. And then we help people establish LLCs. You can have a trading LLC, and if that's the case, you get taxed on the overall profit or loss at the end of the year. You don't have to worry about every single transaction. So just some thoughts. Rocky Mountain Jack, how are you, brother? Hope you're doing good. Last live, you said adding to your LLC would require changing the operating agreement to state the clock over for the LLC. Does keeping a number of digital assets without a price call at Caleb & Brown wise any problems? I think I know what you're trying to say, so I'm going to answer it that way. Separate of the tickers that you've already added and wallet addresses you already added to the LLC, you would have to make amendments to the operating agreement. So let's say you had, when you originally set the company up, you gifted XRP, Bitcoin, and ETH. That's all you owned. That's what you moved over. And now you want to add some quant and XDC. Okay. If you're adding new in that context, digital assets, you're going to have to make changes to the operating agreement, add an amendment, list those wallet addresses on there, and gift those assets, get that notarized, timestamped, so that transaction's verified. If you're just adding two positions, then you're good. You can just do what you've been doing, buy them on the exchange, send them to the wallet that's listed in the operating agreement, and that can serve as written action or written consent because it's on a public ledger. It's easily verifiable. So no problems there. Now, the last part of this is keeping a number of digital assets with price calls at Caleb & Brown wise cause any problems? I mean, you're going to be aware of where you're taking profits, right? And Lewis made a good video about this today, so I want to touch on this if we have a second here. Some people just arbitrarily pick price targets for stuff because that's where they think the prices are going to go, but they really don't have a plan for the capital after.
Is this talking about Kathy Wood or
no? But it's relevant.
Just make something up. It's fine.
Yeah, it's going to $500,000.
Nice lady.
She's playing a role,
Yeah,
God love her. She did really well on Tesla.
she did.
So, yeah, I think it can be right, but you just need to be aware of the tax implications that you're going to incur when you take those profits. Make sure that you have a plan for that money. What are you going to do with it? Like, why is that price target that you've set on that platform meaningful for you? And what does that do for you? Does it pay off your home? Does it allow you freedom? Can you put that capital to work somewhere that replaces your income? Are you setting up a college fund for your kid? Like, you've got a purpose for that money before it's there. Like, I think that's the way that you should do things and know, a couple steps ahead. Like I said, I think a lot of people just arbitrarily pick price targets, and then they're like a dog chasing a car that catches the car. Like, oh, I caught it. Now what do I do? So I think it can be a good idea. especially and it's never wrong to take profits. You never go broke taking profits. And I think Caleb and Brown is a fantastic position, broker to hold your assets with and execute those types of transactions. Their fees are a bit steep, depending on,
Yeah. And the only thing that I've seen that kind of worries me is I see a lot of people that are wanting to rush to Caleb and Brown to liquidate immediately when there's price appreciation and get out of a position that way. And it's like, I can appreciate that. I'm not here to tell you what to do, but I think that you should sit a spell. If you start seeing big numbers show up on your screen, don't get in a hurry. Drink a glass of water. Take your dog for a walk, whatever. Don't rush and hit sell now, because there's plenty of people that I know personally that we had a whole lot of Bitcoin, like a whole lot. And none of them have any money now because they made a little bit of money. Don't rush. I mean, everyone has their own lifestyle choices and decisions that they want to make with that money. And if you're going to be happy with it, you can live with it. More power to you. But I don't want to see anyone rush into exiting a position on something too early if they don't need the money. If you need the money, if you're going to be out in the street tonight because you don't liquidate something, I can understand that. But if tomorrow is the same day and you're clothed and fed with a roof over your head, I'm not too concerned about sell now on getting out of a position, because I think the thing with this is that people have gotten entrained on pump and dumps.
Yes.
And you see the price run up and run down, and this has kind of been the cyclical nature of the crypto market for a long time, but that's not where we're heading in the future. We are going to get utility in a position that prices will become more stable, in my opinion. And there won't be these huge run-ups, run-downs, and everything else. Now, the market's always going to move, but I don't think it's going to be these, 100x, 1000x crazy experiences that people have had. And at the same time, I don't think you're going to see people doing rugs on, a massive utility network that's being used by financial institutions. So if you're placing your bets accordingly, I don't think you're going to be a victim of that type of situation for the most part. It's not to say that there couldn't be someone that has a big utility project that ends up going bust and having a bunch of issues and something crazy happens and it does go down. But I think that the winners that will be chosen and are chosen have kind of strategically built out their safeguards.
Yeah. Like I said, just have a plan for your plan, right? If you know what you're going to take profit for, take that amount of profit and use it. If it's to replace your income and you have an investment opportunity and, you need, I need $2 million so I can earn 5% on that every single year and make $100,000 to replace my income. Sure. And it's a safe, secure bet at 5%, and you can set it and forget it, and you're kosher. Like, okay, makes sense to me. I think you may have some of those opportunities on the XRPL with the AMMs. So, and other assets may have other opportunities as well, like we talked about XTC and what we're working on there. So things may continue to play out, and they will. There'll be DeFi protocols and other things that are built out long term that I think allow people to leverage these assets in a meaningful capacity to produce passive income. We're just not there yet. A few other questions.
Kinesis money is like Glint, but runs on a Stellar XLM fork for fractionalized gold, silver, and crypto. I don't know anything about it, but I'll check it out. I appreciate you putting it on the radar. It's interesting.
Has a yield system. Okay. Are Songbird and Flare and Hedera competitors? I think they're going after two different markets and use cases, and the people that would be utilizing those networks are different.
I would look at Hedera more in competition with the Left Zero. My opinion.
ICP. I think
ICP.
Yeah.
Which I can't get past ICP because of Insane Clown Posse.
Yeah.
So in my mind, there will never be an institutional use case for that because of Insane Clown Posse. Like if I sat on a board of a company, I'd be like, your token's called what? And that would be the end of it. Like the meeting would be over. I'd be like, well, rebrand and come back. I'm not hiring the insane clown posse to run my finance. I'm sorry, but it's not going to happen.
Yeah, I think they're competing for base layer for Web3 implementation and dApps, right? I literally made a video on Hedera earlier today. The governing council that sits around Hedera at this point are behemoths, right? Google, IBM, Dell, FIS, Standard Bank.
Have we reached out to anyone from Hedera to come to the mastermind meetup? Because if not, we should.
We haven't.
They're out there in town.
They're in Dallas, Yeah, I think that they would.
I'll make a note.
Yeah.
See if they want to send somebody. I like Hedera as a project. I think it's great. I think there's a lot of use case, and I think it has a bright future ahead. So, I mean, if you're invested in it, I'm not dogging it at all. Flare and Songbird, I don't know. I mean, like Jake said earlier, I think that Flare's got a lot of potential. It's just not there yet. So it depends on how it plays out.
If the banks and institutions did get the airdrop for that, like I'm guessing they did, then probably some pretty substantial upside. But I don't see them as competitors, to answer the question.
Yeah. I going back to it, is like I had a lot of belief in Odyssey as a platform, and I thought the library token was awesome. I was like, this is the future. And it was not the future.
Nope.
So great idea though. I think that Odyssey's really, really cool, and what they were trying to do was great. I think they just got screwed by the
SEC.
The Gensler. Yeah.
Yeah.
Are we going to the Gold Coast Expo? I am not.
Still in the air on that. The individual that I was working with that was part of the orchestration of that event is no longer affiliated. It's in March, and so I need to decide one way or the other.
I love Australia. I just don't. I can't fit it in the calendar right now. So I've got some very, very good friends in Gold Coast. So it's sad I won't be able to go, but maybe next time.
There's one of the questions I wanted to go back here to. It says, what is the documentation difference between gifting and a simple capital contribution? If it's just simply adding a gift letter, if so, do I still, here, I'll show you on the screen here. Do I still
find it?
Out information in operating agreement? So
be back one second.
You're good. There's some people that will recommend that your LLC purchases your assets from you for like $1 or whatever, and that you buy the ledger and like you sell the ledger without knowing that the assets are worth a certain value, or you're willing to sell them at a lower cost. That also resets the cost basis and the time frame that you've held those assets. So that's why I recommend gifting the assets as the capital contribution instead of having the LLC purchase the assets, because I want to maintain the cost basis that I acquired them at, and then also the time frame that I've held them. Especially if it's a holding company, I'm going to get to take advantage of long-term capital gains tax. So when you're gifting those assets into the LLC and you write that down on the capital contributions page, you'll list the wallet address that they're held in, the ticker for the asset, the amount of the asset, and the dollar amount on the day of transfer, and you'll get that notarized. And that serves as basically a timestamp on when that transaction took place. And later on, you'll have to file a gift tax form with the IRS. I can't think of the name of the form off the top of my head right now. It's a something 7. Anyway, when you go to file that, because it's notarized, there's a timestamp. It's easily provable when that transaction took place. Most states don't require that you have your operating agreement notarized, but I think it's really beneficial to do so in this use case. So you don't have to fill out a gifting letter right then, but at some point in the future, you would likely have to file that with the IRS, especially if it's over $18,000. You're going to have to file that. So. New York, New Jersey mastermind meetup. We've talked about the Northeast multiple times. I'd like to get out there and do something. There is a NFT New York in April that our attorney is speaking at with Hester Pierce and a few other high-level professionals. So maybe that'll be an excuse to get out there. Still, again, kind of up in the air if I'm going to be able to make that or not. Once I make that decision, might have something that correlates with it. I think that'd be cool. Let's see here. Is wisdom? Oh, this is a good question here.
Yes.
Is wisdom more valuable than net worth? I would say your network is more valuable than wisdom. But
the amount of people that I've seen make terrible, foolish decisions because they lack the wisdom in a situation, myself included, can cost you a lot of money. And so it doesn't matter what your net worth is, that if you're making bad decisions, you're going to learn the lesson one way or another. So I believe that I'm fortunate enough to have gained a fair amount of wisdom in my life. And I do hold it with very high regard in my own personal assets that you do. So I think that being said is that to go on a tangent with this is that a lot of people may be interested in learning about crypto and finance and everything else like that. But I've gotten to be quite the biohacker nerd with reading about mental performance and different supplements for all kinds of cognition enhancement and things like that. So the wisdom does work very well when you also have your brain functioning properly, and God forbid that you have any type of neurodegeneration, dementia, or anything else like that, because you can gain all that wisdom and not be able to execute on it. But I would say yes, that is true.
Yeah, if you make $1 million, it's best you become a millionaire very quickly. Because if you don't have the wisdom to be able to keep it and use it, money's just a tool. That's all it is. And if you don't have the capability to wield that tool in a responsible way, then it's likely that money will flow to somebody else that has that capability. So, yeah, I would regard wisdom higher than I did net worth. Well, and you might gain some wisdom by messing up too. So,
yeah. You'll get it one way or another.
Can you position a DeFi application? Can you position a DeFi applications such as Flare Finance, Insice into an LLC? You can leverage assets held by an LLC in a DeFi application in order to produce income for the company, corporation, or the associates. But unless you coded the DeFi application and that was the business for the LLC, I don't think you can take an outside ecosystem that you don't own the IP for, even if it is decentralized, and move it into your LLC. You'd just be leveraging that to produce income with the assets you're holding in the LLC. A lot of good questions tonight. I just want to say that. You guys are...
Appreciate it.
It's good stuff.
It's great. I will say that I see some questions coming through from Twitter X. Thanks you guys for watching us on there, but for whatever reason, I guess the API call for the chat doesn't work yet. So if you do have a question and you're on Twitter, if you jump over to YouTube, it'll show in the chat on there. Sorry for the inconvenience. I'm hoping, I saw something they were working on getting that integrated in the near future. I like the way that X's stream platform works really well. So we'll
figure it out
in the next couple of weeks. Hopefully they get it going.
So, I told you I couldn't recall the name of the form for the gift tax form that you have to file with the IRS. Nate was nice enough to put it up here. It's form 709. I knew
Nate's the man. Nate always pops up with random information. It's great.
Well, he's been very proactive in establishing things beforehand. And
Nate's a sharp guy.
I've been really happy to meet with over 500 people over the last couple of years.
That's a lot.
It's been a lot. I've been really impressed by the amount of people that have decided to, take action and put themselves in a good position previous to price appreciation to make sure that they can mitigate taxes and, just really set themselves up for success on the other side of this.
Yeah, no, it's great. Someone who has 0 XRP, does it make sense to DCA for 2024-25? Slow and steady wins the race. Hey, I don't have any. I think that it's a great position to put yourself in. If you wanted to DCA into certain assets, then it can't hurt. I mean,
Not too late yet.
Only put in what you're willing to lose is like, I guess, the disclaimer with it. But I believe that we are set for fair appreciation in a lot of these assets. XRP, XLM, XDC, IOTA, HBAR, Quant, not so much, but I think there's room there. Casper, Stronghold's been coming on the radar a little bit. I think they have a great use case. It doesn't take a lot of money. There's people that we know that didn't invest a whole lot before the last bull run and did pretty
really
well.
Really well.
So, if you've got a few bucks that you want to throw in the crypto slot machine and hope for the best, then I say go for it. Don't get mad at me if you're wrong. So
yeah, well, I'll just throw the disclaimer out here. Nothing said here is ever financial advice. Always consult with your financial advisor before making any investment decisions. This is for entertainment and educational purposes only.
Mostly entertainment.
For what it's worth, Uncle B Rad, I'm with Max. I think DCA is the way to go. I think a lot of people try to time the market, and I've never done well with that. I don't know anybody else that has either. There's been a few people that do some TA and stare at it all the day long and swing trades.
And you got to figure it's one of those things. If you don't have a whole lot of free capital every month to throw in, making any type of investment, getting a habit of investing is something that a lot of Americans need to learn.
Yeah.
And I think that putting small amounts in is a first step for a lot of people. You're going to win some, you're going to lose some. It is what it is. But I think it's a lot better, use of your money than buying, Call of Duty character skins or something like that. Which
those could make a lot of money too, Max.
That's what you want to do,
The NFTs. That's where it's at.
Yeah, stop at the battle pass. It's like $10. Just go there. Don't just be good. Get good.
Don't get the golden skins.
Follow me on Twitch for more insightful reviews.
JT, you're like hammering it on the content, the comments on X, and we cannot see one of them.
It's probably just pictures of us flipping us off or something. Yeah. It's like, you guys shut up. When gifting your tokens to your LLC, is the amount of the capital contribution based on the date of the contribution or the original cost of those tokens? It's the asset. Yeah,
it's at the time of the gift, but you don't get to step up in cost basis because it's a gift. So you're shifting the cost basis and the time held to the entity. As long as it's done that way, then you're good. But yeah, the gift tax that you would, a lifetime gift tax that you're eating away will be whatever value on the date that you gifted it. And that's why I say get it notarized on that date. And that's the price you list for the capital contribution.
Jeff, you're not a Hennessy performance Hennessy, are you? Because that'd be cool. If you are, I don't know. I am a fan of the fast cars.
Robbie says, Jake, I spoke with you about putting my assets in my Wyoming LLC and have done so. So pre-liquidity event, what do you recommend doing next now that my assets are in the LLC? Sit on your hands.
Stacking dog.
You just, I found this as a common theme with people. I love that people are being proactive and you got a win under your belt and you're excited and you want to do the next step, right? If you were going to do something else, I would say start looking for advisors that you can work with post liquidity event and start developing those relationships. Continue to build your education around business and financial investments and whatever verticals you want to take advantage of post liquidity event. And those would probably be the next steps.
If you want to start, say you want to go into real estate, you want to get into CRE or something along those lines, go ahead and start following the boring CRE accounts on Twitter now and learn how to do due diligence on a deal and run it down in Excel like you're doing the real thing and figure it out and make all those mistakes now and learn those things before you just jump into it, and you'll be that much further ahead. You know, there's a lot of people that are glad to share that information freely on YouTube and Twitter, and you know, they'll kind of show you the ropes on some of that stuff. And then when you get to that point, you know, I tell people, I don't like going out in a new vertical solo. And I always like to find people that have done it, have been around the block and have had success with it, that I want to partner with. You know, make sure it's people you can trust. It's hard to tell that sometimes, but you can find good partners to work with. That's where you can really learn, is working through an actual deal with somebody. And even if you come in as a minority piece on that, say that they're, you know, putting up 90% of the capital and they're just shaving off 10% for you to get in on the deal with them, but you're still getting to walk through the whole process and kind of see what the flow looks like and how that is. That's where you're really going to learn everything that you've been reading and going through, you know, Bigger Pockets forums and listening to podcasts and everything else. It all goes out the window. It's the Mike Tyson, you know, everybody's got to play until you get punched in the face. Yeah. So it's you can do all the preparation now. Just know there's going to be some hiccups that you didn't plan for, and so that's why I like to find somebody else to work with that can kind of help along that process, because they're going to have those contingencies figured out, whereas you would be like, oh no, what have I done? And then you have a big mess. Yeah, the wisdom. Back to that.
They've already messed up the deals. They've already, you know, fallen for the things they shouldn't have. They've had the pitfalls. They've lost money. Yeah. And they can walk you through the process and say, well, you need to look for this and make sure you're looking for that. And, you know, we messed up on this before and did this calculation, and we need to do it with this number, you know. Yeah. All those are the little things that make a big difference in deals. And if you can figure that out beforehand, and maybe you don't even like, there's gonna be some people that want to be completely passive with this stuff on the other side. They're like, hey, look, I want to find somebody that I can partner with and partner my money with or invest with. You can still find those people, right? Go find the Grant Cardones. Go find, and I'm not saying Grant in particular, I'm just giving you an example of somebody that's done well.
Yeah.
But there's somebody in your backyard that is not Grant Cardone that's doing deals. Elevate's really good friends of mine. They're based out of Northwest Arkansas and Dallas. They've got a great track record. I'd be glad to get anyone in touch with them. It's Brian Wagers, if you want to look him up. Jorge is his partner. They're in Dallas, but they do a lot of multifamily. People like that kind of have these groups, and they do meetups and they educate, and it's really you know, a good way to go with that. I mean, you see the same type of thing going on for VC and private equity deals. There's all kinds of meetups and networking events, and people want to get together and work through stuff together and pool capital. And you'll see people put together an SPV and, you know, jump some people in on a cap table that way. So it's like, I think that's really what it is preparing yourself and building your network as much as possible. I don't know what your network's like currently. You know, maybe you already have a great network and you don't need any of this, but that's all I would do, other than continue to accumulate whatever assets you feel are going to be the best place to put your money and hang out. Yeah. So there's two here for me that I want to touch on. Lori T31011 has asked, am I taller than Zach Rector? Absolutely not. I am not. He is like 6'4", 6'5". I'm 6 foot on a good day. So I think I weigh more than him. But he's definitely taller than I am.
I definitely weigh more than
him. But Zach is big. Yeah, I was surprised when we met him for the first time in person in Vegas and at how tall he is. And then Jared has put this here. I wanted to touch on this. So he says, work 25% harder now to work 100% less on the future. You know,
unless you're just addicted to pain like me.
And that's where I'm going with this. I think the people that are going to really excel with the opportunity that exists now, you might be sacrificing right now some things in your personal life to be able to acquire more resources in the future, but the work doesn't stop. when you stop working and you stop progressing, you stop getting fulfillment in your life. You stop growing, and you're either growing or dying. Like there's really no in between. For me, I mean, we're working hard now, but when on the other side of this, I view this as just the beginning of the rest of my life. There's going to be so much more that I'll have access to, and the resources that I have that I need to be doing. So it's definitely like, pedal to the metal now, but on the other side of it, it's work even harder, and it's work smarter too. Like a lot of the things that I've learned over the last 3 or 4 years, just in building what we have, and going through the things that I have, I feel like have prepared me. Had the appreciation happened sooner, I don't think I would have been ready to really take advantage of things in the same capacity that I am now. And I hope that's true for a lot of other people, that people have used this time that has been a delay in the gratification to really build the skill set, the traits, and the beliefs you need to be that millionaire, right? Like I said earlier, if you come into $1 million, it's best that you become a millionaire very quickly. But and some people will retire. Jared, I don't know how old you are. You might be 58 years old, put in your time already, and really have you might be redlining it here at the end to make sure that you have enough to retire and you can spend time with your family and do all the things that you want to do. And there's nothing wrong with that either. I would just say, if you do have the capacity to be more and do more, and you have, God's blessed you with that capability, and you're going to forego that, I think that you're doing a disservice to, what you were put here to do.
Be addicted to pain like me with the limit configuration cube.
Oh, Jesus.
The puzzle box.
Yeah. It's
what else we got?
Yeah, I got some.
That was a good question.
Mr. Nobody is running it up on Twitter. Let's see here. Mamba mentality. Yeah. That's what it is.
Say hi real quick. Yeah.
Yeah, appreciate you, brother. Glad you're joining us here. Somebody, Space Cash says Mamba mentality.
Kobe.
Yeah, Kobe. If you want to be the best, and you want to be at the top of your game, you're showing up earlier than everybody else. You're still hustling, even after you just won the championship, right? And again, there's very few people that want that level of success or have the drive to achieve that. I'll go into this. So I've talked about this before, Maslow's hierarchy of needs. And I view this as like 4 sections. And really it kind of correlates to outlook, how long you plan into the future, and also the income that might be associated with each one of these. So a lot of people just stay at survival. I would say probably 60 to 70% of the population, that's all they focus on. Maybe they might look a week, a month into the future, but they're mostly concerned about paying their bills right now, and they live paycheck to paycheck. If they do get off work, maybe they go drink some beer to forget about their day and relax and do whatever, unwind.
Hopefully it's not Bud Light.
It probably is. I know for most people it was for a long time before last year. Anyway,
this podcast is not sponsored by Bud Light.
No, we're definitely not. And you might live comfortably there. You might get to like 100. If you're married, maybe you and your spouse, if you live in California, you're making $200K between the two of you, and you're surviving. The next level above that would be status, and a lot of people are concerned about status. They are competing with peers or who they view as peers, and they want the house, they want the cars, they want whatever it is, and they'll finance it and basically back themselves into a hole where they have to keep working the job just to pay for the assets that they've got out on credit, just to look as though they're keeping up with the Joneses. The level
really
above,
cool, though.
Yeah, and then you could be making good money there. Again, like if you're in California between you and your spouse, and status is what on the upper side of that, it might be $500,000 a year between you and your spouse.
Yeah.
And I know people
depends on geography and everything else.
I know people that make $300,000 and $400,000 a year that still live paycheck to paycheck because they upgraded their lifestyle to match their income, which is crazy to me, but people do it. Because that's their focus. They want status, right? The level beyond that would be freedom. And people are willing to forego some of the things in the lower tiers in order to achieve that, right? So even on the survival side, like they'll scrimp. They don't have to have, like, they'll sleep on the bed that's on the floor. They'll eat ramen, go extended periods of time without vacation or other things. They forego social events or travel or other things. They don't care, they don't have to have the fancy watch or the car or the home because they're so driven for the freedom component that they're hustling and putting everything into something, a business or investments or whatever it is, so that at some point within the next 3 to 10 years, they actually get to that category. And
when I was dating Charla, I remember her dad went and bought an R8 when they first came out. And I remember his comment to me was, anyone that doesn't go pay cash for this car straight out of the dealer and drives it around is a loser. And that stuck with me from that moment on, of don't have a car payment if you're going to have a cool car. Wait until you can pay cash for it. And that's what he did. That's how he had more than enough money to do it. But, Rick kind of instilled some of those things as like a rich guy that knows what he's doing. And if you don't know who he is, Rick Massey, he was number 2 at Altel for a long time. He's got an equity firm here in Arkansas and does some things. But Rick put himself through law school and didn't have anything nice and didn't have anything flashy, and drove a little Tacoma and raised his kids and family and built a hell of a business and sold it to Verizon and exited at Altel. I think he was the number 16 highest paid corporate executive in the United States at the time. And he got a centimillionaire payday whenever they exited from that point. And so he does whatever he wants now. But he didn't do anything flashy to get there. I can tell you that much. So,
yeah. And then I would put one more level, right? So freedom, obviously, you can probably make a lot of money, and freedom can be the prerogative or the goal. I don't know what the cap on that one is. I haven't figured that out yet. And I want to talk about the time frames people think in. So we talked about, status. People might think a month out, survival, maybe a month or 2 months out.
Tomorrow.
Yeah. That's most people. And then status might be a year or 2 that you're thinking. Freedom, you're thinking 3, 5, sometimes up to a decade out into the future. And then the last level is what I call purpose. And these are the crazy people that have the Mamba mentality, that are the Kobes. They are the Michael Jordans. They're the Jordan Spieths and the Tiger Woods. They are Tony Robbins, Trump, like people that have an insatiable hunger, that have this purpose that drives them and stay so dedicated and driven and disciplined doing the day-to-day things that build and compound on time, way longer than anybody else in their peer set. Even already, if they have the money, they have the fame, they have everything else that should have quelled that desire, they still go, because what they're chasing is beyond anything else anybody can fathom. And it's a lot of times it's something they've made up in their own mind. And sometimes you have to do that, right? Like if you want to achieve that level of greatness, you got to be competing. When you are the top guy, you can't look around anymore. You have to be chasing something that's higher than yourself, whatever is driving you. And those are the billionaires. Those are the Elon Musks, the Trumps, the crazy people that continue to double down on things even long after. Like, just to give you like an example here, Elon had $100 million. He was a centimillionaire off of PayPal when they exited that company with Teal. And he rolled all of that again on SpaceX and Tesla. And like, he could have just been done. He'd ride off into the sunset, have him $100 million invested, put it with a good hedge firm or hedge fund that's producing 20-30% a year, like kosher, just coast. That's not him. He doesn't care about the money. The money is not it's just a tool to him. And that's what I was talking about earlier. Like, anyway, everybody has a different threshold, and none of these are wrong. I just want to say that whatever you're focused on, there's nothing wrong with any of those. And it's a very small portion of the population that has the drive and the willingness to work beyond what you're going to get in between survival and freedom. I would say a lot of people are driven by freedom, and once they achieve that, they're happy. They have a fulfilled life, and they're able to spend time with their family, travel, do whatever they want to do. So, and I think that that's a great life. Myself, I'm one of those crazy people. So, XDC, this is a good comment here. XDC will kill Ethereum. I think Ethereum's going to kill itself. Really interested to see how this plays out with Stephen Rayoff and Vitalik and Joseph Lubin, and what's going to come and be disclosed about the SEC and their involvement with some of the collusion and the ICO that went on there. Yeah, Uncle B Rad, being stagnant is death. Hustle. Matthew says you can't stake XRP, but you could loan it. We potentially looked at he's talking about Nexo in another comment. So Nexo is no longer available to U.S. citizens. It was for a long time, and you could borrow against it. I did choose to do that at a couple different points. Leveraged it and bought more XRP at certain points, and actually ended up working out really well. It's not something I recommend unless you're very confident in the direction of the market. And even if you are, it can end poorly. I know Bearable Bull leveraged his at Nexo and then ended up buying some properties, and I think he ended up getting liquidated when we went back below 50 cents. So hate that for him, but that's the risk you take when you're using DeFi protocols. What we do with Polysign is, we try to hedge against that. So the provisions in the loans that we have with a particular party allow you first right of refusal. So if there is an instance where the collateral that you have escrowed drops below the value that was loaned, you have first right of refusal to buy it back before they sell it on the market and make their money to cover the loss. So you don't get that with a DeFi protocol, though. Any more than like 40 or 50% LTV, I think is risky, even with the market where it is right now. Very, very volatile. Until we have, a much more established market, I think it is still risky to take loans against your digital assets for any amount. Again, Nexo not available here in the U.S. for people, Matt. Now you might be using a VPN, and if you're accessing it illegally, that's your prerogative. I'm just telling you what the law states. Let's see here. Wealth preservation. Here's a good one. On the ETH note, did they have a representative at Davos? I didn't see anybody from Ethereum at Davos. Obviously XLM, XRP, both of, Ripple and Stellar were both there. They leverage those networks for the products that they use in enterprise applications for payments. But I did not see anybody from the Ethereum Alliance. I could be wrong. I could have missed people. I know Vitalik did move to another country and currently has a pretty big posse around him at most times. The country that he moved to doesn't allow for extradition back to the U.S., which I find interesting. If you were confident that you didn't do anything wrong, and you weren't going to have problems, why would you move to somewhere that, people couldn't extradite you? So, wealthy spaces has asked, what about lending it out? So ODL, Ripple uses XRP in that application and does earn an interest rate on the XRP that they lend out. Uphold is their partner to be able to facilitate the transfer into different currencies for the banks that they're lending to. I'm not aware of an application or DeFi protocol that allows you to lend your XRP to other people. Flare has some promise of that with issuing FXRP, and my only concern with that is the amount of spark that you have to put up. If you're able to put up both sides of that transaction and earn a yield on it, I think that that's a viable solution. But you have to put up 2.5 times the value of the XRP in Spark tokens to mint the FXRP. And, again, if you've got that much and you can put it up yourself, cool. If you're relying on somebody else to not walk off with your XRP after they put up 2.5 times the value, be leery of that. So,
in the wheel.
Yeah. So we do have some other products through Digital Ascension Group that I'll touch on here before we close out. We're able to issue PPLI against digital assets. If you do have more than 5 million in value, that's where this comes in. That's kind of the minimum. These are not cheap policies. They're expensive to orchestrate, but they have a lot of benefits similar to a trust or an IRA. But they still give you complete control of the asset and allow you to leverage loans against it and use it and do what you need to inside the policy. So it's basically a protection. You fund the life insurance policy with the asset. It puts a life insurance wrapper around it, which allows it to grow tax-free inside that policy and mitigates any estate tax for when it passes to whoever the beneficiary is of the life insurance policy, which we often set as a trust. Tends to work pretty well, and you can leverage loans against it in kind or in cash for the way.
Smart way to do it for some people.
Yeah, well, and I think that'll be, a lot of people have been proactive, moved assets into an LLC or trust previous to price appreciation, which would be my first recommendation. I think that's probably cheaper, especially if you already have pretty significant allocation to digital assets. People are probably going to ask what that amount is. If you're single, it's less than if you're married. If you got more than maybe $50,000 to $80,000 invested, if you're single, I'd state that an LLC is likely a really good idea. And then, more than 300,000 if you're single in specific assets that you think will, appreciate substantially. A trust is probably, again, a really good idea. If you're married, you get a little bit more than that. But yeah, and so if, let's say you don't put anything in place, you got it in your personal name, life insurance policies are going to be a really great way to get those assets out of your name and prevent people from getting them if they sue you, protecting them, allowing them to grow tax-free, and then also having, full capability to leverage them as well. I'm getting stuffy, Max. My sinuses are getting me.
It's all the weather change, right?
It's starting to get warm again here. It was like 12 degrees a couple weeks ago. This person says 2.5 is why I hold so much Flare and Songbird. Yeah, I mean, you're going to have to. And hopefully those assets appreciate in correlation with whatever assets you're going to be trying to mint. Because if they don't, you're still not going to have enough, and you're going to have to, partner with somebody else to mint those assets.
If you're enjoying this, appreciate if you'd like, share, subscribe, leave a comment, something. Any engagement's good. Tell us you don't like us. We appreciate that too.
Drive the algorithm.
Tell me my glasses are stupid or something. I don't know, but we'll get more people in here. I know Jake has a couple of conversations on the schedule. Wednesday is that the next one coming up. Planned. We might do something else, but Wednesday, is it Crypto Sensei?
Mm-hmm. Yeah.
Yeah. Robert Crypto Sensei is going to be coming on Wednesday night. So if you have any questions that you want to get addressed then I think that would be a great opportunity to do so. Robert's a pretty sharp guy as well. And if you have an idea for, a long format video that you want Jake to cover about some of these types of mechanisms that would make sense, we're always looking for good ideas to put stuff on the channel. It takes a lot of time and effort to write something and put it together and record it and do all that. And so don't want to just go willy-nilly on things that people aren't interested in. So the best way for us to know what to make, what to produce for you, is by you telling us. So if you can do that, that'd be great. But
made one on ESG the other day, and Bax was like, "Get out of here with that. Nobody cares about ESG and the environment."
They don't.
So, if you guys can make
the audio was bad enough that I was going through to edit it, and it was picking up like an air conditioner or a fan or something like that so bad that it sounded really garbled, and I was like, just don't even worry about reshooting it. So it's
one of the guys in the chat here, he's asked if we work with Canadian clients. We do.
Yeah.
So Aaron Grinhaus is our partner up there in Canada. He's the head of the Blockchain Council in Canada, and has connection to all the CPAs, estate planners, wealth managers, and people that are proficient with digital assets up there in each one of the regards. The benefit that you guys have there in Canada, in comparison to the rest of the world, is that you have no limits on your gift tax. So you can gift to your heart's content, and there's no problems. Your taxes are a bit higher than the other jurisdictions.
Just a little bit. We have separate channels that we put together in the Discord server for the mastermind, though, on different jurisdictions that we have some people in. So we've got a UK one, Canada, and an Oz one right now. Yeah. So we're glad to make more, for people that ask for them as well, and those types to share resources and do those kinds of things. But that's kind of where the more concentrated groups of people were that had questions about specific stuff. But glad to help out Canadian people, any way we can there. So
absolutely.
How to build biceps video.
Uncle B-Rad. Synthol. Yeah, well,
that's
I actually never used any synthol. I contemplated it a lot. I would like my biceps to be bigger. I would say grow your triceps. I know that sounds stupid because you asked me how to build your biceps, but
big arms, that's the way to go.
2/3 of your arm is tricep. So if you got the horseshoe, there's a lot of meat back there. It's gonna make your arm look a lot bigger.
This sounds counterintuitive, but farmer's walk and really heavy rows did wonders for my arm size. Mainly because I was getting a significant amount of forearm growth from my grip strength enhancing from farmer's walk. So if you do like a plate loaded farmer's walk, you can get like those rogue farmer's walk deals. I don't know what your current weight that you're carrying around is. I would usually load it up somewhere around 350 pounds and walk with that. Your arms are going to blow up in a weird way. So check it out.
Well, you have 3 different mechanisms for growing muscle. So you have progressive overload, which is what most people do. They just progressively lift more weight over time. You have blood volumization, which is the pump that people talk about. And then you have, and these all cause hypertrophy. But the one that Max is speaking on there is actually going to cause hyperplasia. So if, let's say, you went and got a pump in your arms and then you go do farmer's walks, the stretching of a pumped muscle causes actual muscle cells to split, and you get new nuclei in the muscle, and then you can grow those over time.
And then you end up never being able to lose size.
And if you do, you immediately get it back as soon as you start training again. So
it's a bad thing, but a good thing.
We talk about all the stuff in the mastermind too. We have channels that are dedicated to health and biohacking, performance, all that stuff. So appreciate the question, Uncle B Rad. Wrapping my arms with duct tape, putting on long sleeves. Well, that we talked about the blood volumization. There are a lot of people that do, especially if you have an injury, you can cut off circulation, and you can do like
blood flow restriction training works really well. It's kind of dangerous, but I'm not going to say that I hadn't done it and had good results. So one of those things I wouldn't publicly recommend to somebody, but I would probably say I did it.
This guy says Jake's a genius with everything. What the fuck? I'm not. I know a lot about a few things. People just happen to ask some questions that I know about. There's a lot of things that I am extremely ignorant on. That's why I keep other good people around me, right? Everybody else has their proficiencies, and if I need good help, then I lean on them, and vice versa. So I think that'll be it for tonight. We'll go ahead and wrap it up, man. Max, I appreciate you joining me on here. We'll do these more frequently, and look forward to seeing you guys Wednesday night. Again, we'll have Crypto Sensei on. If you guys have any questions for him, reach out to me on other social media platforms. Let me know what you'd like to ask. And again, if you have any ideas for long format videos that you think would be helpful for people, please share them. I want to give you guys what you're looking for, right? I'm guessing a lot of the time we're going to be doing more videos on other networks and kind of explaining why things might work aside from the XRPL. And we'll continue to do content around that as well, and all of the tax mitigation. Yeah. So anyway, I hope you'll have a wonderful evening, and we will see y'all on the next one.
Thanks, guys. See ya.